All right. Good afternoon, everyone. I appreciate once again you attending this meeting this evening. As much as I know that it takes you a really bit of consecration and commitment to be able to attend this meeting. A lot of people have been agitating that Moses, when are you going to talk about scalping? Scalping. Um, you know, they're expecting that I'm going to use a title like scalping stuff, but it's better I use something that actually delineates the major, major way of understanding it gradually. Of course, I'm still going to talk about the scalping, but it has to go through process. It's not just something that eventually somebody can just jump into just like that without having a prior understanding of how to prior knowledge of doing it. So as much as we have it on the platform, uh, this is more or less scalping. It's something that it will change your trading skill. It will change your trading understanding. It will actually help you to be able to get yourself, uh, you know, to be able to get yourself appropriately, um, inside the trade. If you have been losing and you have been losing trades, more often, I think it's high time that you have the opportunity to study charts, be diligent, and at the same time have a concise way of trading. So before I go further, I want to confirm if everybody can hear me. If you can hear me, I want to know if you can hear me very well. Just go to the chat room and just say something nice, and let's have a wonderful time together, so that we can just jump into the meeting as we go on. Yeah, I can see everyone can hear. Um, Chooks, how you doing? Uh, Sam Shegun, Shegun, Olusegun Fakpuro, you're welcome. Good to have you on the platform again. We we are here to have a pleasurable time. It's going to be very, very simple. Something sweet does not go too long, and we also want to show the skill. This happened this week, so it's not something that happened last week. It's something we trade. You can see that profitably. I've been showing you that I've been profitable in my trades, and so this thing makes it very simple for you also to make profit if you can follow it through. Though there are lots to it, a very lot, a lot to it, and it's not just what I'm showing on the platform, but if you follow what I show on the platform, it's enough for you to make money. There are a lot of knowledge that you need to accrue in case you want to have all the knowledge about it. But notwithstanding, apart from the knowledge that you have about this understanding of the charts, it's also possible for you to understand that even the little knowledge I share, and those things, if you have been watching those videos, you will understand that this thing is highly simple. So, and that's why you need to just find a way of understanding. I think everybody can hear. Let me just see how many people is on the platform as we speak now. We have Oladari there. We have Kasim. King, can you hear me? We have Shegun there, Olusegun. Um, we also have Chooks. We have Christian. Christian, can you hear me? Ufodule. Sam, you're there. Jeremiah, you're there. Taiwo, everyone, you're there. As many as possible. I wonder why you're not saying good afternoon. All right. So can you? Okay. Now I can see you're talking now. Okay. Good. So before the others will join us, of course, I just have to go ahead. We can't be waiting. The webinar may not be more than 20 minutes, um, but even as short as it could be, it's more like a bomb that will help you. So this is just something you have to concentrate. You have to concentrate heavily. Yes, Christian, happy Democracy Day too. All right, so to understand the platform once and for all. As you are looking at it, before I go on, let me just give you an intro to what I want to do. Many times, a lot of people, they have two things that affect them most in trading. Number one, the first thing is fear of losing out, fear of missing out. When they wake up in the morning and they see price running somewhere towards an angle, they don't know what is going on. They don't know where the price is going. They don't know what bias the market is actually forming. What they know is that market is going in this direction, so I just have to follow that direction. I just have to go. Maybe I know where it's going or not. And they enter, and sometimes when they enter, the market begins to pull back. Now, maybe it's a retracement, maybe it's not a retracement, just because they don't have a bias for what they are doing at that very time, then they run out of the market. Then later, when they run out of the market moves back and begin to go in their direction again. Then they begin to feel sorrowful that if I had done this, I did this, if I had waited a little bit, or I would have done this, I would have done that. I would have made some profit to myself. So as a result of all this, it becomes very important for you to understand that fear of missing out is a big problem for traders. Number two, fear of losing. Fear of losing. Those are the two major things that affect traders. Now, the fear of losing in the sense that if I place this trade and the market is now, going towards your stop loss, then you begin to agitate and begin to feel that am I not? Is it not going to hit my stop? Or will this thing hit my stop? If this thing hit my stop, will I be able to make this up? And at the end of the day, you close the trade. Or sometimes um, you might even do something that is not welcoming in the market, and you lose that particular position. Then later you see the market going in your favor. So, so as a result of all this, you want to make sure that you have a plan. You have a plan. Now, one thing about these two things I've just mentioned is that you must have a plan. What I'm about to show you just this evening is very simple. But as simple as it is, you should also understand that it takes you to study your chart. There is always a setup for you. People have been asking me, Moses, give us scalping. You know, um, at the end of the day, I'm going to give you scalping. This is exactly why I'm trying to do this now. So now, you see, the scalping is not the problem, but the problem is you. Will you be able to have a plan? Will you be able to take it as a model? Will you be able to say, if I see this, I'm budgeting that I'll do 20 pips, and if I do 20 pips, okay, um, whatsoever happens, that's okay by me. I'll stick to the plan. So if it hits me out in 20 pips, I know if I have that same setup like 4 or 5 times in a week, even if one hits me out, I'm very sure that the remaining four will play out well. So I'll get all my money back. So you're not ready to change that plan. So that's why you will not change your plan. That's why you will keep to that plan. If you don't have a plan, you have the fear of losing, you have the fear of missing out. Okay, so that's why in this module, Friday, we're talking about price action, understanding the peculiarity of the London session. Now, we don't know how to trade. A lot of times I've been trying to break this thing down for a lot of people. They don't know that it's a lot of knowledge I'm trying to part here. I'm parting with a lot of knowledge, and it's not just a small thing. And it takes you real commitment to be able to pass this kind of knowledge. And it's expensive. Well, some time when you begin to pass this kind of knowledge, and people still don't understand that it's a big knowledge. So it's very important that everyone should understand it and should be able to get it well. So the price action, we're just going to go through it and we'll see how the market can favor you all the time. You can always get trade, at least almost every day, if you know how to walk through different charts, if you know how to play around the charts and find your setup. Once you get your setup, then it becomes very perfect for you. So let's go through it. This is a chart of Euro GBP, and you can imagine how this chart is. A lot of times you'll be looking at how to interpret this chart, and the interpretation of this chart actually gives you the understanding. So 3 months ago, this is this current month, this is previous month that ended, and this is 2 months ago, that's the month of April. This is the month of March. This is February. This is January. So and so on like that. So as you can see, ever since January, price have been moving, but something happened. You notice the price just jumped up, and as it jumped up, that was the kind of reaction here. That was March. This is June, May, April, March. Yes, as pandemic price, just fell terribly like that, and you can imagine ever since that time, price have been misbehaving. So it jumped up, it also fell. So during the pandemic period, we're still in the pandemic period, but at least this was what happened. Now, the next month, because of the crisis, the price seems as if it's going down. So that's the month of April. A lot of drop in the market, so it dropped heavily. So as price dropped heavily, um, a lot of people will be looking at it that okay, the price will be going now. So when hope was now restoring back into the market, when people are now thinking of opening lockdown and so many other pumping of liquidity and so many other things, last month you see that hope restored seriously towards the opening of the economy. You see what happened? That was why you see this strong bullish candle. Small wick, you can see there's not much wick on top of it. So which means that hopefully a lot of things are happening. I hope going to begin to happen. This candle was as big as this one. It was down before. It was down before. So as the month open, because we already have a kind of hopeful candle, hopeful trade. So the anticipation is that price will still likely further move higher. So as you're looking at it, our focus will shift to 1, 2, 3. These 3 months. So this is a monthly bias. So if you look at this monthly bias, this candle was not there. Look away from this candle. Possibly. Um, Let me just look away from this candle for now. This particular candle, look away. Just look at these two candles. Okay. So this one, sorry, let me just put it appropriately. So these two candles. Now it looks like an engulfing candle. Engulfing candle. So as a result of this engulfing candle, it shows you that the buyers took charge of the market, and eventually they took charge of the market, and they won completely. So we simply mean that there are a lot of buyers in the market. So the next month we may be expecting a repricing, so that will help us to take advantage of the real market. So this is exactly why we will need to have a basic understanding. Now, when you see a setup like this, a kind of engulfing like this, now this is a structure. These two candle is a structure. Now, which simply mean that you have seen price going down, then one price just engulf it just like that. So you delineate the um, opening price of that last down candle, this last down candle. You delineate it. So um, delineate it, and let me quickly change something there. So that is 88, 85. So let me quickly make it straight. 88, 85. Good. So, sorry, 88, 85. Okay, 88, 85. So with the 88, 85, that's pretty much that's the opening price. So you'll be expecting when price return to the opening price. It may go down a little bit, of course, if possible, but it can't go beyond. Then you also mark the threshold. Sorry, 88, 85. Then you also mark the threshold. That's the half. If you look at it very well. Now, how do you mark the threshold? It's possible. Very simple. Um, all you just need is just put your, fib there. Just mark it from here down to the top, and this is 50%. You can see we're almost there, so we can just put it there. So you can delete that. So that's the threshold. You can mark it out. So once you mark that, we can now go down to lower time frame. So let's go to lower time frame. Actually, okay. So lower time frame on weekly. This is weekly time frame. So you can see the place we mark the other time. This is the 85. I want 85. Oh, okay. This is 85. Okay. And this is 85. So perfect. So now, oh god, 5. I don't know why this thing is the okay. It's just sometimes like that. It's good, because of some other thing. So that's it. Perfect. Okay, now that's 85. But looking at that, we can before that, this is now weekly chart. This was the previous week. Okay, and if you look at it, previous week, um, you know, this was the previous week, and now when this candle traded above, it traded above this last up candle. So that's the old high that was there. If you look at this candle, it didn't touch it. You may be thinking it touched it. It didn't touch it. It didn't touch it. It didn't touch the tip. It remained a little to touch it. So it remained a little to touch it by maybe a pip or something, or 2 or 3 pips. So you can now reframe it, because after price traded, it traded into this up candle. That's why you saw the rejection. Immediately traded into it. Look at that. If I show you, it traded into this. Remember, we're still working with the monthly engulfing candle. It traded into that, and that's why you see this rejection. So now we can now adjust this very well to the previous old high. That's this old high. So let's just change the price to the appropriate point. Okay, let's just put it at 80. That's 65, possibly 5. Okay, just a round figure. So make it the perfect Sorry, 85, 85, 85. Okay. So with this now you have 85. So now you can see how accurate that leg is now. So it's the leg is very accurate. So simply put, you can see how price came for it. Now this was last week. Price dropped. As price was dropping, you'll be expecting price to drop into that leg. Remember that the monthly time frame showed that price is actually going to come down because it actually engulfed the monthly chart. So as we have delineated this is a weekly chart. Now this candle was not forming then. So, but this is a hold high. Price traded past it. So when price come there, you're expecting a reaction. So this is the reaction that we're expecting now. So now that reaction is what we are going to capitalize on the lower time frame. Now, this analysis is based on higher time frame perspective. It's based on higher time frame perspective. Now you have delineated on your higher time frame. Now you have delineated your higher time frame, so you know where. Remember that the bullish candle, the one for this week. Let me quickly show you again. This particular one has not formed. It is this down candle that we have during the week. So this one has not formed this week. So we delineated it that we expect price because this candle did not completely touch this. I'll show you as we go on. It didn't completely touch it. So as we okay, it didn't completely touch it. Okay, even this one, it didn't completely touch it. It didn't completely not touch it. If you see it, I'll show you. So it's remain about maybe 2 or 3 pips to touch it. Um, okay, so all right, beautiful. So if I think it's a bit, yes, it didn't completely touch it. So now, because if you look at this, if you let's just look at this price. It's not coming now. I want to get the price level. Um, okay, it didn't touch it completely, but uh, I'll show you on the lower time frame. Okay, if you look at this price at this point, this is 864. Can you see? And this line is 865. So it simply means it remained just a little to touch it before it began to reject. Now this is the week. This is this week. So this is you have framed your setup already. Now, if this rejection, if this price rejects here, where do you think price will likely want to go for? Number one, you'll be expecting that price will be heading for at least the top of this candle, possibly half of this candle, half of this candle. If you mark it up and down, okay, let me just use this for the half. The half of this candle should be somewhere around this point. Okay, that's a half of that candle. All right, you can use your Fibonacci, draw it from the top to the low, find the 50%, you can mark it. So if price is actually reacting off this leg, you're expecting price to go to that place. All right, so if price escapes from that place, then we will have price at this leg. Okay, you can also go to daily time frame to frame it out appropriately, but this time we will have to. Okay, I think I have to remove something. Let me remove the Fibonacci. Okay, the Fib. Okay, so so now this is the Fib. If the price touched that point, okay, this is the point. Where do you expect price? You expect price at this point, possibly at the previous old high, which is sorry, which is this. The this is the threshold. Okay, you are expecting it at the hold high, that is here. Okay, but we can go to lower time frame now, because of daily time frame will show us a bit better price action. Okay, now that's it, that's the top of that, that's the old high. So we'll be expecting price to locate the place. So once you have framed this, remember that all this one, this is today's candle, 1, 2, 3, 4, 5. This is Sunday candle, Sunday. This is Monday, Tuesday, Wednesday, Thursday, Friday. So as you have framed this is now your range. This is the last low candle. This is the last high candle. Within that place, that's your trading range. So you're expecting price to reach for the place. Now, if you look at this candle very well, it didn't touch it well. It is only this candle that touched it deeper, according to the higher time frame perspective. So now, as you have framed it out, so you now be waiting when price will hit that level and what price will do. When price hit that level, that's when you're ready to take your trade. Monday may not be your trade if they don't hit the level, but most of the time, uh, prices come to that point. So because of our analysis, let me push this there. This is Sunday trade, so I'll just put this on Sunday. Okay. All right. So then, secondly, I'm going to block that price action there so that you will know exactly that that's exactly what we are looking at. Okay, all these things. So this section is where we are looking at. So we now go to lower time frame. I'm going to reduce this prices. Okay, a little bit better. So I think you're there. You're looking at it. All right. So reducing it that way, then you already have a range when price come hitting that level. So now we go to lower time frame for your scalping charts. So as you go to lower time frame, so we are going to go to 15 minutes time frame where we are going to do our scalping. All right. So this is 15 minutes just for quick reaction. Okay, so this is 15 minutes and this is all the shaded parts. So let's now go. This is from Sunday. So now we want to look at it, how this thing play out. And for the analysis sake, I'm going to reduce the chart more so every one of us can see. And if possible, if I can still reduce it more. Okay. Oh, it's too much. Okay, let me just leave it this way. So, okay, now you can see it already. So delineating it so that you can see that this is this week, this small trade, you can see this line. So we can get out this box now, this shaded area, so that it doesn't disturb us. So this is the rectangle. So we can take that out. And now this is Sunday. This was Monday. So this was Tuesday, Wednesday. This was yesterday. And this is current trade today. So now let's go. I told you most of the time, London session, you have to pay attention to this. So many times that I've been talking about trading, I've told people about taking trade according to time. Even if you look at higher time frame, it's not just jumping into the platform that actually gives you um, the opportunity. You will know the time when entry forms. It is the entry that actually gives you the possibility of taking understandable trade and risking less in the market and taking much profit. So let's go and let me explain further. Now this is the higher time frame leg. That is the, if you look at it, I'm going to put my cursor there. So you can see this is 88.65. That's the place we're expecting price to hit now. So price open on Monday. You're not concerned with all this movement. It's none of your business because you're expecting price to come there. You hold on to your bias that if price comes to that leg, because already you know price will come there. So if price comes to that leg, then you'll be ready to take a your to take trade. You'll be looking for entry. Of course, is it possible for you to take this trade? Of course, if you have other thing that you can take advantage. Of course, there are some other things that you can do to take advantage of this. Like like you can see this double top. You can see there's a double top there. I taught you about double top. Double top. If you look at that double top quickly, line. Okay, this double top you have here. If you put a straight line to it, when that double top was rated, of course, I'm not ready to take any class on that today. It rated that double top. Trade the double top. Okay. And when it rated this double top, what happened? You can see something happened. See, from that, I told you 10 to 20 pips above that double top. That's 4. Just watch it. 4, 5. So this is about 8 pips. So when it's rated that 10 pips or 20 pips, 10 pips or 20 pips, okay? Okay, when it's rated that, so you can be a seller here just because of your expectation. You can be a seller here. And when it breaks this, it breaks it at this leg, breaks this low at this leg. When it pull back there, you can also be a seller here until it gets to that point. But we're not talking about that. So we will be coming back to that. So, but now I'm going to apply something quickly, and that is a bit of indicator. Just the indicator is not an indicator. It's just to be able to know which of the sessions, just Asian section, just going to add this. Actually, let me quickly make a comment. This strategy I am using now is a strategy that is called an ICT concept. It's more of Michael Houston, but and other information have been added as well. But he actually gave a bit of more light into this. As you know that the strategy, people always bring different strategy. Chris Loris actually discussed about this Asian section much and much and much for those of you that have listened much to his videos. Then Michael Olsen gave a better touch to it. Then there's a book they call Smart Streets. That book also gave a lot of insight to a kind of patterns like this, discussing different patterns, where you'll be able to take advantage of some positions like this. But while I'm giving you this today, it's just because I want you to have a perfect understanding of what the markets will do. Now, after the Asian section, that's where you expect the London manipulation to take place, London protraction to take place. Now, this is from this line. If you check it very well, this is 00 GMT to around okay. Let me just give you a perfect okay. So if you look at it, this is Monday, this is Tuesday. So that Tuesday when the price hit that leg, that's what we're now looking at. This is 00 GMT. If you look down here, you will see that on that line, that blue line, that's 00 GMT to okay, to 5, okay, to 5, okay, to let's say 6 o'clock at this time. That is when but in our own time, this time should be around this time should be around let's say 5:45 GMT. So that's 5 GMT, so to say, but let's just say 5:45 to 6 o'clock GMT. This range is what we call Asian range session. This is Asian range session. So this Asian range session is the time where Tokyo and Sydney trades. After that time, that's when we call London session. This session from 7 o'clock in the morning, from 7 after the Asian rain, from 7 o'clock line. Where's the line? Okay, from around 7 to 10 o'clock. That's where you'll be expecting the opportunity to do the trade. That's when the opportunity will post itself. 7 to around 10. Okay, this is 10 o'clock. This space is where the opportunity of trading will come. I'm not talking about New York now because I'm not ready to even talk about New York. So I'm talking about only London session. So as price eats that leg, then you'll be looking for entry. Now there's an entry inside this place already. There's an entry here. So I'm going to block that and see what happens. Now, as price, as price hits that level, then you'll be looking for entry. Inside these 15 minutes, you may be looking for an entry, but you didn't see entry here. Because one, as it hits here, it's rejected and trade. This high becomes a focus. As you can see, there's a double top here. Price locating that double top. Let me make this chart a bit big so that I can show you a little bit of what I'm trying to explain. Okay, you can see that there's a double top here at this point. So as you see that double top, you have to be very active. You'll be waiting for price to trade through it. Okay, as price trade through it, okay, as price trade through it here on this candle, okay, maybe I should make it a little bit bigger. Somebody is saying that can't see it very well. Okay, no problem. I'll just make it a little bit bigger again. Okay, that's okay, good. Can you all see now? I think you should be able to see it well now, better. Okay, you can see here this double top. That's why I'm putting the line here. So you'll be waiting for price, and you can see there's an up candle here before the price went down. Now, as price trade, you'll be waiting for price to trade through that leg. As price trade through it, because already you can see the momentum, the price movement. The momentum is there. So as price begin to move higher to show that they are willing to go higher. So you'll be waiting for them to break structure. On this high, price trade through it here. So then you'll be waiting for when price will actually test that leg. And you see these two candles actually should be one candle. So because they are two down candle. So your stop loss will be somewhere in the below the threshold, just below the threshold. Because of this momentum, you're not expecting them to come down again. So below the threshold, if you put your fib here to this place, the threshold should be somewhere here. So your stop loss should be somewhere here. So now this is your entry point. On top of this candle, this first down candle, that's your entry. Okay. So that's your entry point. On top of this candle, that's your entry point. You can see it barely took some You can even place your trade is supposed to be here, but you had 5 pips to your entry, because sometimes, because of the spread may not be able to take you in. You may have 5 to 3 pips on it, so that they can be able to take you in. So from that place, let's just say from here, you're taking a trade, and your stop loss should be below that threshold level somewhere here, and that's about 15 pips stop. 15 pips stop. Okay, that's the place you're going to put your stop loss. 15. They are not supposed to come down there. They're not supposed to come there because of the momentum. If they're actually going to go up. So 15 pips stop, and you're anticipating the first old high. That is this old high, and that is about 38 pips. And that's about 38. That's a ratio 2 to 1. Then you can take partial profit and let the remaining run. If you allow the remaining to run, you can see you have about 52 pips up there. So that is an entry for you. Somebody's asking question. What are you asking? Will the video link for this link be posted to us through email? Because I've missed a lot. No problem. I'm going to upload this particular one to the YouTube, and also you also have the link with you, so you can go through the link to have this video again. Now you can see that at this point, as it breaks this level, then the retest, you'll be waiting for the retest on this old high. Then you take your trade, anticipating this previous old high. You can see this is the old high really. If you measure it again, that's well over 40 pips. That's on Monday, and that's enough. This is your entry. This is your entry point. So that's about 42 pips. That's enough for the week. Of course, you may just look for one more trade to make it around 50 or 75 pips and close the trade for the week. Okay, that's a beautiful setup. You don't need to trade all the time. This setup is enough for you. Now, somebody's asking question again. Does this type of setup happen every day? Yes, it happens every day, every single day. But I'm not saying that you will get this setup every day. It happens every day. If you can look across the pairs, if you are that diligent to look across the pairs, you will get this every single day. Now, since the first setup is gone, so is there any better way? The question is this, Moses, is there any better way to refine my stop? You know, we have 15 pip stop already. Is there any way to refine my stop to a smaller size stop? Maybe like, let's say, 7 pips stop loss. Of course, it is possible. So we go to smaller time frame, let's say 5. You know, we're taking on 15 minutes. So let's go to 5 minutes. On 5 minutes, you can see that same leg. As price hits that leg, this is the last down candle. You will be waiting for price to trade through that candle in momentum. As price trade through that candle, you know, price has trade through that particular candle that hit that low. At that point, since you already have the buyers that you are going to buy from that point, so you can see here, as you trade through, you wait for a retest on that particular candle. Remember, they may not come down into the body of that candle because of the momentum. So then you wait for a retest. On that retest, that's the retest. Let me show you here. On that retest here, you can imagine as they retest back into that place, you see what happened there. You had 5 pips to your entry point, and you take your trade from there. Now, if you are taking your trade from there, then your stop loss will be below this level, and that's about 7 pips. 7 pips. Can you see that? 7 pips. Just 7 pips. And you're anticipating the previous old high, which is somewhere around that point. I'm coming. Let me put, okay, let's go back. Let's go back, okay. Okay, this is the first, let me look at for an horizontal line. So this is it. So you're looking for, okay, you're looking for this. Now your entry is at this high. Okay, then you're anticipating the first take profit level, that's 56 pips. That's enough for the week. You close your partial profit. You may allow it to range to move on, which gives you about 66 pips before the end of the day. But if I were you, if I get to that place, I'll just close my trade and let it go. I wait for another opportunity at another time. So that is the previous old eye. But you can also refine this better for a better view. If you go to 1 minute, all right, you can see this is a bit clearer. As price hits that leg, that 88.65, this is a hold eye. I'll just make it clear for you. As price hit that leg, you can see there's a hold eye here. That's one. As you can see that, for a better entry. Okay, and you can also see that it also broke this high to show you. See that momentum, see that candle, 1 2 3 4 5, that momentum. So it broke the first leg, second leg, retrace back. So that's your entry. This is your entry point. That entry, your stop loss will be below this. That's 7 pips, 7 pips, and you're anticipating the whole high. So that's exactly London session with protraction. You can imagine this is beautiful. If you can just take your time to study the chart, you already have this scalping method. It's pretty much perfect for you to trade, and that is and that is and that is beautiful. Chooks, you said that's too small. 7 pips. Yeah, that is it. You can say that again. It's like that. I'm telling you, it's not too small. Your strategy determines what you do. I'm just telling you that's precision. That's what we talk about, precision. That's how you can imagine. You can see it doesn't come back. This is what we call precision, and that is scalping method. It's not too small. That's just how it appears. It is. It is not risky. If you actually check up with that's precision, I can show you another leg again so that you will know what I'm talking about. The bias, just check it. Go to your chart, check it. Uh, um, uh, so go to your chart. So you will see it more and more. In fact, it happened the second day. Let me also show you the second day so that you will know. This is the second day. As you see this chart, let me quickly make it clear to you. This happened the first day. Now, remember that we're anticipating this hold high on the higher time frame. Let me quickly show you on the daily time frame when I was doing my analysis. Um, this is I'm not asking you to just jump into it. You go and find out and see. This is where we're anticipating. This is our take profit level. We have mapped it out that this is where we're expecting price to hit on higher time frame, and this is where to anticipate the price will be heading to. So as a result of that, price has not reached that place yet. So we still have the opportunity to trade. So the second day, let me just this is the second day. This is Sunday. This is Monday. This is Tuesday. Now on Wednesday it happened again. So let me quickly show you. London after this, Asian range. This is Asian range session. So let me just take you through uh, the 15 minutes again, so that you will see it perfectly well. And then okay, reduce it. All right. Okay. Now this is Sunday. This is small trade on Sunday. You can see that. This is Monday's trade. That's where we looked. Now this is Tuesday. Okay, that's where we marked. Now I want you to see what I'm going to do now. Fibonacci. As price took out that level, now because our main target has not reached. See, I want you to see something. The main target on the higher time frame is this leg. That is 0.900. Is this leg. Now, so that's where we are anticipating to reach to. because now this is the place we're anticipating to buy from. This is our take profit level. Now I want you to see, as we took that buy, it traded on this high, you'll be expecting a retracement. I'm not saying every day it's going to be a buy. Of course, there's going to be a retracement. So as it happened to this, you have taken your profit, you targeted the hold high, you've taken your profit, price range till the next morning coming down. As price come down, your bias is still strong that it's going to buy, and you're not expecting it to go and break this leg, because if it breaks this leg, it simply means price is going to go down. So now you can see that as price comes down, this is Asian section. So during London session, you are still expecting price to go lower. Why? Because of this this price leg here. Okay, follow me. I'm going to show you something now. Go to your Fibonacci and see body to body. Please, I'm coming. Watch what I'm going to do. Body to body, not week to week. Check that. From that Tuesday to body. Check. We have you can take trade from 61.8, 70.5, 79 retracement level. But better still, because you have these two down candle, the same way it happened. That was where structure was broken. To know that the price actually going upside. This was where the structure was broken. So as price returned to that structure level, normally had it been price has returned to this level completely before, not this with this small retracement, then price will not come down there again. But because price has not come there before, it only come retesting when the price was full of momentum. So as price come down into that block level, you can see as price come down there, 60, 61, 70, I'll be waiting for when it touches that candle. That's where I'm going to take my trade. So I'm taking it from that line, which you have just seen there on top of that. I'm taking it there, and that is 88. That is 88.85. So from that 88.85, where will my target be? Please watch what I'm going to say. Already, I've showed you where I am going to get the target. This is the target up here. And my fib will also show me where my target is. In case you need fib to show you, you change your fib upside down, and you can see that. That's your fib. So body to body. So you have the symmetry, price with symmetry. Okay. So your body to your legs, sorry, high to high. Strong. So fib will show me that I can take my profit at this point, but on the higher time frame, we have the hold high here, which simply means that you can take your last profit here and close your trade. But on hold high, you still have this in case you take partial profit, you can still allow it to roll. So your fib showing you this. Please watch what I'm going to show you now. As you take your trade from here, look at this price level. Just keep watching. It's hit that level here, and it also hits the hold high. Now, apart from that, the same thing that happened where I shaded. I need to show you that it's not a gimmick. It's a perfect price delivery. At this leg, watch that. It hits this leg. Please watch what I'm going to show you. It's not a gimmick. It's not fake. Watch that leg. I'll make it big now. Let me make it big. Also, I've been trading this strategy for years, so it's not something you can see. On Tuesday again, see what happened on Monday. It broke that leg. It retested. You buy. See that leg again. This is the leg again. It broke it. It retested. You buy again. Now, apart from that, let's see what happens to smaller time frame, like 5 minutes. Please watch it. See that it touched that leg again. Boom. Broke the hold high. Broke it here. See how many candle? 1, 2, 3 candle. It's retested it on this candle, on this particular candle. You buy from there. Now see 1 minute, please. And now I'm still going to show you something, please. Watch it. It's not something, it's not a rocket science. It's something that we do more often. As it come back into this price, how many pips? 7. This time around is 8 pips. Okay, it's 8 pips. Okay, go ahead. Now look at that. On 1 minute, I want you to see it again. See what happened? This is the old low, broke it, broke the high. Price broke the high at this point, retrade back into it. As it retrade back into it, you're taking your trade from this old high, this candle. As you take that, check your stop. That's 7 pips again. What happened? Price move up. This is price structure. There's nothing like it's too small or it's too, this is what we do more often. Um, so Chooks, you're asking me. Um, there's 3 settings to trading: protraction, manipulation, and the last one is expansion. So it's just as simple as that. If you have, and it is not even protraction, really. It's not protraction. It is you have manipulation. You have you first have manipulation. You have expansion, and sometimes you have it is expansion. It starts from consolidation, which is the manipulation. Then it goes to expansion. Sometimes back to retracement, and sometimes distribution, and that's how it is. The protraction is just basically attributed to London. Only London. And that's why this I've decided to show you I've decided to show you this gold mine so that everybody can have this very good understanding. If you take advantage of this, there's nothing like it's risky. Do you like to put 30 pip stop loss and you still get it at the end of the day on something that is not precision? Of course. Now, immediately, let me quickly clarify that before I close for the day. As you take your trade here, price move further. Remember that you will get this is 7 pips. How many 7 pips are you going to get each time the price moves higher than the 7 pips? Let's say it moved 14 pips. You move your take profits. You have to move your take profit to 7 pips. Close the 7 pips part of it. And if it moves 21 pips, you move it to 14 pips. As it moves, then you continue to move it higher and higher until you're out of the trade. That's how trade is, and that's um, uh, and that's how it will make profit. So I'm checking. Sam, you're asking your question. How is trailing stop loss applicable here? That's why I've just explained it now. When the price moves, you already anticipated the hold high. So as price move higher, then you move alongside to it. For example, if price has not moved 20 pips, please don't move your stops. Don't move your stop. If price has not moved 20 pips up, please don't move your stop to break even. When price move 20 pips, then you can move your stop to break even and you can take partial profit. Then if it moves 40 pips, then you can close all your trade. Or you can close more profits and leave small to run. That's how to do it. Please, can you share your experience of the market? I've just shared it. That's what I've just done on Monday, as it went out full mostly to market experts. Anyway, most of the time on Monday market, I don't normally trade. That doesn't mean that you should not trade on Monday. I don't normally trade on Monday. The reason why I don't trade on Monday sometimes is that I want to see what the market will do. I want to know what direction they're about to move to. That's why I don't normally take trade on Monday. So I wait to see the direction of the market on Monday so that I will know what happens in the market. And sometimes I would have done my analysis. So if it meets my analysis on Monday, I'll take the trade. But most of the time, I just wait to see what will happen on Monday. Then go ahead. Then you said what account for more profit trader during Asian section. That I don't understand that one, but maybe you ask the question again. I don't understand. Okay. Olusegun, he said, "Sir, this protraction timing seems running too fast. There possibility for slow runner like me, that is set up that work for me? Of course, that is for somebody like you. Somebody, a lot of people may not be able to wake up, as early as 5 o'clock to begin to look for what they want. Um, so, so as a result of that, um, don't worry, you'll get what we call New York strategy. You get what you call New York strategy, because one of the key points about the protraction is that you will just see the price in the morning. The price will be running in one direction, and that is to mislead a lot of traders. A lot of traders will follow it, and when you follow it that way, they will lead you on the wrong direction. Then they will move the way they want to move. Like, for example, if you come to that 15 minutes again, you can imagine when you wake up in the morning and price drop 1, 2, 3. You can imagine you would think the price is going that direction, not knowing the price actually having where it's actually going. And after it has gotten there, taking out liquidity here, it bounced back, and you can imagine ever since that time, and see the second day too, 1, 2, 3. Can you imagine again? Price jump up again, and even New York session it came. So the next webinar will actually be on New York section. When you don't get trade London session, does it really mean that you should? Does it really mean that you should not? You should forget for that day, forget completely? No, you have about 4 trading opportunity in a day. I've just showed you one now, and that is the London session. So when you don't get trade in the London session, most of the time, the London session, New York session will complete what the London session has started. So I'll be showing you what the New York session. The New York session is actually the most simple session to trade. I'll show you from the next webinar, because that's exactly what I'm going to train on the next webinar. But that's a New York session, the peculiarity of the New York session. So the New York session will actually come back, and I'll tell you the time range when you'll be expecting that retracement, so that you'll be able to look at what happened during the London session and what you're going to do during the New York session. So that's exactly how this market plays. If you don't get trade in the London session, never mind, you will get trade in the New York session. Okay, so, and that's the scalping. The New York session will at least give you nothing less than 20 to 30 pips every single day, if you know how to take advantage of it. All you just need is just get to your system before 12 o'clock, and then you'll be able to get your setup. So any other question? Chooks, you are saying something? Will be days, Chooks said, will be days on Tuesday or next Friday? No, it's going to be a Friday. Fridays for advanced class. Dominic, you said, when do we expect the next webinar? That's Friday. Only Friday I talk on price like this. Tuesday, Wednesday is for basic and intermediate, while Friday is for advanced class like this. Okay, and then I'm going to do something for all of you, so that you will not think that this is just what what we are going to be looking at. Maybe next week I will take a trade like this. I will record it. I'll take a trade and record it. Then or if I don't record it, I'll take it, I'll let it continue to run, I'll snap it. Then while we come to a webinar like this, I'll show you on this same platform, on the same chart, I'll show you that this is the trade I took. I'll use 10 pips or 7 pips or 6 pips or 7 pips. I'll just use appropriate pips. Then you will see what I'm saying. That it's not just a joke. It's what I do. I do most often, and I'm actually showing you how to risk less and gain more. So I appreciate your time. Your time. This is just the beginning. So you will get more of this, but please go through this webinar. You will see. And as you have checked, as you have stayed with me, please go through your chart. You will see what I'm saying that is all true. Nothing is a lie there. You will see it there. And there are a lot of more videos on this. that I can share. Some people are asking me for indicator. Okay, I'll give you indicator. If the indicator will solve the problem, but indicator cannot always give you price action. So I really appreciate your time, and whatsoever you do, this is exactly price action, and you can get more from it. Take time to go over the video again. You get more. Appreciate you. Thank you for coming. Have a wonderful weekend.